it's a $25 million revolving credit facility with a $25 million accordion. Having a tier one bank lend us money at this stage in our size is something we take as a massive compliment.
Do you think it will change the way the market views Summit?
I think it already has. This $50 million potential of capital that we have available to us is half of our current market cap. The firepower of the business is materially enhanced today versus what it was yesterday morning.
Are there any particular types of mine or jurisdictions that really stand out to you from a royalty perspective?
We have 2 assets that are going into construction this year. So if we talk in a year's time, we'll have 6 assets either commissioning or in production. I can't will the stock higher. I have to get out there and tell the story.
Welcome back to the Investing Markets and Money podcast. And on the podcast today, joining us is Drew Clark, CEO of Summit Royalties. He has been on the podcast before, but we have new developments with Summit, which we're going to be talking through today. Welcome to the podcast, Drew.
Thanks for having me.
So basically the news to kick off with is the company has a new credit facility. Can you give us a little bit of background on that and why it's important? Because some people will think, well, hey, so it's a credit facility, but why is that quite critical for you guys?
Well, I mean, the simplest thing is we've gotten a validation from a tier one bank in Canada, which is very exciting. That's proof of our business model and our outlook. And I can't stress that enough. Having a tier one bank lend us money at this stage in our size is something we take as a massive compliment. Why we did it is simply this lowers our cost of capital materially. And the cost of capital game in royalty land is very important. This enables us to use our balance sheet to grow our NAV per share in a more accretive way if we were to use cash to deploy it to buy new royalties. So this is a validation. It lowers our cost of capital and it'll enable us to potentially pay more than our current multiple if we needed to, using our balance sheet in order to continue to grow that cash flow and NAV per share that we keep harping on when we do these interviews.
And does it change the size or type of royalty streaming opportunities that you're now able to pursue? Does it change the strategy in that respect?
I think the short answer is yes, but we've had access to debt in the past. This just formalizes it. But having, just as a reminder, it's a $25 million revolving credit facility with a $25 million accordion. And that accordion, we have to have a conversation with our friends at National Bank about what we want to use the capital for. But I wouldn't suggest that if we didn't find something really juicy that we're really excited about, that we couldn't potentially expand that facility. We still do have access to equity. We still have our shares, but we are looking at doing sizable transactions in the space that this facility will definitely help with.
And do you think it will change the way the market views Summit now that you've got that tier one banking behind you?
I think it already has. I've gotten some great notes from competitors in the space, much larger competitors in the royalty space. Congratulations, you got that quickly. This is a natural evolution in the step of a company like ours. It typically takes a few years to get there. So I really want to, I think it's a testament to the team and the portfolio we have in front of us, but also the National Bank team seeing that we have the ability to keep scaling up this business the way we have. It will open more doors. I wouldn't suggest our balance sheet was a concern of people, but now people say these guys have access to their capital. And as a reminder, this $50 million potential of capital that we have available to us is half of our current market cap. So we can really get aggressive here and really go out there and buy some more, accretive royalties and streams.
And do you think it helps? I mean, in the sort of competitive world of mining royalties, does it help you to compete for higher quality assets?
Absolutely. Yeah, 100%. No, and I think we were pursuing high quality assets anyway. I think this sort of puts a flag in the ground as to where we see this thing going. But the quality is important to us. And if you look at our portfolio, it's throughout the portfolio. We have high quality operators, and we want to be able to say, look, if we're doing a $20 to $30 million deal, we have that access to capital. We don't have to use the debt, but it's a tool there. And what I like to expanding on this is not suggesting we're emulating them, but it's someone worth watching. Silver Wheaton, which is now Wheaton Precious Metals, throughout its history, used its credit facility. It would go out and have that facility so it could close quickly, and then it would go out and use equity to backstop it. So this is also a tool for us to also just continue to scale up. I'm not saying we won't ever use equity again, but you can use both of them in conjunction with each other. One followed by the after, or one combined. So the firepower of the business is materially enhanced today versus what it was sort of yesterday morning.
You recently closed on your acquisition of Star Royalties. Can you tell us how that's helping to change the longer term vision of Summit Royalties and what sort of opportunities that combination now brings to you guys?
Well, look, simply with Star, we're a larger entity today, and I don't know if this debt facility would have come in without the inclusion of that cash flowing royalty at Keysbrook and the development asset at Copperstone. So I think that cash flow was part of the process. So the impact of Star immediately is we're a larger market cap company, and we had the ability to acquire this debt. We've also acquired three people. One's a director, one's a CIO, and one's a VP finance. So we've also beefed up on the management side of things. So we have a deeper bench now. We have a bigger pool of capital to pull from, and it's going to have a really good impact on the company. The integration is going great. They're never fun to go through, but everyone's really hitting the ground running. And as a reminder, these individuals that we brought on have immense amount of experience in the space, so they know what they're doing. There's no hand holding here.
Excellent. And I wanted to ask you also get your views on the broader mining sector and where you guys see the strongest opportunities today. And are there any particular um, types of mine or jurisdictions that really stand out to you from a royalty perspective?
Well, look, I mean, the opportunities come as they're presented, so you can't sort of create a list of what you want to see. So I'll tell you what we're going after. But I think your first question is what are we seeing in the broader market? In the broader market for us right now, this feels like a pause in a broader shift higher in the gold space, particularly gold and silver. So we're bullish. We think this is a good opportunity for us to deploy capital, particularly with operators. And this is sort of hearsay from talking to the royalty companies. The spot prices and the long-term prices, there's not as big of a delta between the two. So I think it's an attractive time to deploy capital. So I would give that sort of overarching view. From a concept of what we're looking for, we are looking for cash flowing or near-term cash flowing assets. And because I can't speak to specific opportunities, let's talk about the opportunities or our current portfolio. We have two assets that are going into construction this year. So assets that are in operation are easy to understand. We would love to add immediate cash flow, but also when there's a defined timeline of production where the permitting, the operator is strong, and the jurisdiction is strong, we're also quite constructive on doing assets there. So if there was another Copperstone deal, for example, Copperstone is fully permitted, fully financed, and in development right now. We would love to buy another one of those. And the other asset that's coming along is Pitangui. If there's another asset like a Pitangui that came along, we would certainly look at that as well as operating assets. I hope I answered your question.
Yeah, no, absolutely. I know it's difficult for you to be able to talk about potential deals you're working on at the moment. Obviously, this credit facility is a big milestone for you guys. From the perspective of the investor, looking ahead over the next 12 months, do you see any other big milestones that you would like to be able to achieve going forward? Obviously, there'll be stuff that you can't talk about.
Well, so we think the portfolio is going to do some heavy lifting. That's there's catalysts within the portfolio itself. We are going to see more research coverage come out of the street here in Toronto. So we think we'll have some more third-party validation of what the value proposition was in our shares. We are also excited to see the development commencing at Pitangui sometime in the second half. Construction has started already at Copperstone. So if we talk in a year's time, we'll have 6 assets either commissioning or in production, which we think is very exciting. So sometimes just no news is good news in the royalty space. No news in the sense that things are going according to plan.
Yes, very true. Very true. And I mean, if we're sitting here chatting, hopefully we will be sitting here chatting in a year from now. I mean, from your perspective, what would success look like now for Summit Royalties in say mid 2027?
In mid 2027, my ambition is to have this company trading at, closer to its full turn of NAV, which is in line with its peers, which is well over $2, a far cry from our $1.30. I can't will the stock higher. I have to get out there and tell the story. And we'd also like to see the revenue pick up, which it's already picking up quarter on quarter. So we're seeing good growth organically within the portfolio. And we want to do more accretive deals. Our cadence of delivering accretive deals to the market is certainly getting noticed in the market, and we're going to continue to do that, particularly now that we have this facility in place. So I'd like to see a larger portfolio, and all of these deliverables that our operators are endeavoring to hit. I think they're going to be knocking it out of the park.
Well, that's great. So in summary, really, this financing really creates a lot more options for you, a lot more opportunities for growth, and there's a real step up for the company.
Yeah, exactly.
No, fantastic. Well, thank you very much indeed for coming on the podcast to talk about this today. Really, really interesting company, and we'll be keeping a close eye on your progress as you guys continue.
Thanks a lot, Stuart. It was a pleasure.
The content of this podcast is for information and entertainment purposes only and does not constitute financial advice. The views and opinions expressed by guests or hosts are their own and do not necessarily reflect those of the Armchair Trader. Investments can go up and down in value, and you may not get back the amount you originally invested. Past performance is not a reliable indicator of future results. We do not provide any personal investment, tax, or legal advice. Always do your own research or seek independent professional advice before making any financial decisions. The Armchair Trader is a media company and is not authorized or regulated by the Financial Conduct Authority.